Good morning. Steve Freed in Chicago with the morning grain comments. We hope everybody had a safe and nice weekend. We're starting out the week with grain prices mixed, beans up a little bit, soybean oil higher, and corn and wheat a little bit lower. Outside markets about unchanged. We're still kind of looking for direction based on weather and also any headlines on the virus and the impact it may have on the economy. As far as the grains are concerned, I think that beans are continuing to be sported at the higher end of a trading range due to hope that China will come in and buy U.S. soybeans. May, June, and July, they bought a record 30 million tons from Brazil. So the question is, do they need that amount, or were they adding to reserves so they wouldn't have to buy as much from the U.S.? Last week, we did see some new sales which offered support to the prices, but it looks like we're going to have a normal U.S. crop, which means that prices probably eventually need to go lower. In the corn, we're in the middle of pollination with about half the crop pollinating. The question was raised, how much rainfall has the Midwest gotten over the last 2 weeks? And according to agronomists, it needs about 3/10 of an inch of rain a day. So when looking at a map, my guess is that 60% of the Midwest got that much rain, including parts of South Dakota, northern Nebraska, Minnesota, most of Iowa, Wisconsin, and most of Illinois. So next week, it looks like we'll see 2 chances of rain early in the week across the southern part of the Midwest and late in the week across the northern part of the Midwest, and then the ridge of high temperatures returns over the weekend. And so some people are still thinking that we have a corn yield that will be above the USDA's latest guess. But the fact that COVID has reduced demand, the fact that our export prices are the highest in the world, and the fact the farmer has a lot of corn to sell limits the upside in prices. The Black Sea futures wheat market is at 11-month highs, and that is due to talk about lower crops there and a lack of farmers selling. I doubt if we can trade September Chicago wheat much above 560 because there's still too much wheat in the world and the demand for importers has dropped because of COVID. Finally, soybean oil continues to rally. Palm oil prices in Malaysia and in China were sharply higher overnight, and that's Malaysian production might be under some stress due to the labor shortage, and we continue to see positive margins about bringing veg oil into China. So I think that we're kind of status quo right now price-wise, and don't see enough weather to push prices a lot higher, but don't see the weather yet that could push prices a lot lower. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, treat people like you would like to be treated yourself.